Hi there. Hi, welcome to Traders Talk, and this is Ming Hon, your host for the day. All right. Okay. If you can hear me, give me a thumbs up so that we can actually start today's session. And of course, I mean, things have not changed much from last week, and of course, this week is even more exciting as we speak right now. Okay, if you are listening to me, then perhaps you are not listening to the Fed Chair Jerome Powell because the Fed Chair is of course also live on stream right now on YouTube because he is actually giving his speech. In fact, this week itself, I think there are actually almost every day the Fed members are all making their speeches. I think they are almost every day that there is someone who is actually going to open their big mouth. Yeah, and of course, I think right now the Fed chair have just spoken, and the market has actually slightly gone up. The futures have actually slightly gone up. And of course, perhaps later, when he actually stresses about the pain points that where the people will actually suffer with all the tightening that the Fed is actually doing, right? Then of course the market will continue to fall. And we are actually also at a very critical level. If you have actually followed us last week or even read our newsletter, which we issued yesterday, uh, we are actually at a very critical turning point. Okay, it's either we continue to go down through the floor, right? Through the floor, or we can have a slight relief from the uh, I mean drastic drop for the last month. Yeah, yeah. So welcome for those who have just joined us. This is actually a show where we actually talk about the U.S. stock market in particular, U.S. stock market in particular, and of course, our show focuses on trading the stock market using options. Yeah, using options. So for those guys who are keen to actually learn to trade options, learn to actually get into the market, and also want to improve their trading skills and learn more, then of course this is the show for you guys. Yeah. Of course, besides this show, we have other avenues where we actually share all our information and all our trade secrets. My trade secrets. Yeah. Of course, we have the newsletter which we issue every week to our subscribers, to our subscribers. Yeah, and of course you can subscribe for the time being. I mean, we are actually giving this out for free. Yeah, you can actually subscribe through the link here. Subscribe through the link here. And of course, besides that, we have also started another channel, which is actually a TikTok channel, where we also actually give some contents regarding trading, and for those who actually want to learn more and also look at what we trade, look at what we trade, and learn from there. Then of course, it can also be a good avenue for you guys. Yeah. Okay. So let's get back to. Let me see. Okay. Let me just check something here. Okay, can you guys see me? Okay, I think yeah, it's okay. So I'm just watching the screen there. Okay. Oh, so let's get to the market. Let's just move out to the market and just look at what has actually happened. Let me share the screen. Share screen. Share this. Okay. Okay, let me just put this up. Let me make myself smaller here. Maybe here. Yep. Okay. So if you can actually see the screen, right? This is the S&P 500. Let me just do this. This is S&P 500, and of course, yesterday we had a red day, a slight red day, I would say. Dropped by 1%, 38 points down. Nothing drastic, nothing serious, right? And of course, if you look here, let me see this. Okay. If you look this, of course, it's not so nice candle. It's a bit bearish, and of course, the earlier last Friday we actually tried to rally back up, right? And then of course yesterday the signs were not too great. Probably, of course, also because of this week, there are actually too many people talking, starting with the Fed chair, right? Today, then of course the market might have a certain risk on this week, and any rallies would be followed on by a sell-off. Even the intraday rallies would also be covered by a sell-off. If you look at the price action yesterday itself, just let me get this out here. If you look at the price action yesterday, right? Okay, here. Yesterday itself, this was the yesterday one. Yep. So if you look at the price action yesterday, yeah, we started here 27. No, it's 26, 20. Yeah, here. So we started here, right? We started here. We actually open gap down. Yeah. Then of course we continue to actually go up all the way, and we reached this, and of course after that we had a sell-off, and of course we rallied back, and we ended the day also down. Yeah. So this was the intraday price action. Quite interesting, because we have basically gone back here. We have actually went down even below the opening, below the opening here. Yeah. So I think more so this week, this is the kind of volatility, daily volatility, which you actually see in the market. So of course, for those who trade intraday, then this is actually some good opportunities for you to actually do your trades. And of course, if you see possibilities of selling on strength, right? Selling on strength, then of course it can also be quite good trades if you actually have the correct signals coming in throughout the day. Yeah. So this is the intraday. Okay, let's go back to the daily charts, right? So we were actually speaking about this level of 3,600 points earlier, right? This is actually the level. This is actually the level which we were speaking on here, somewhere around here. Yeah, 3,600. Yeah, you look at here, where I also place a notification, right? A notification at this line here, which is 3367. Yeah, 3367. So around 3367 or 3006 is actually one critical point to see whether the market actually breaks down below, because this was actually the June's previous low, before we actually had the strong rally for 2 months. Yeah, this was actually the June previous low. Yeah, June previous low. Before we had this rally, which basically recovered almost 50% of the total drop from all-time high. So if you look at the all-time high, which was somewhere around here, right here, back to the lows is actually about how many points here? Let's see here. Here to here is actually about 24% or 25% right here to here. Yeah, and of course, post that, we had a rally, which basically we rallied up back by 16%. And of course, basically we recovered here about 20 about 14%. Yeah, about 14% we recovered. So in total, we have actually dropped to all-time low of 25%, 25%, and back to the top here. We recovered back about 15%, about 15%, and at the end, after the CPI announcement, plus after the Fed rate hike on 21st, right? Basically, the market have actually gave back up the 15% recovery from the lows. Yeah, so we are back here again, testing this 3,600 level, testing this 3,600 level. So of course, if you break down, then you would actually see more people would actually panic if we actually fall below here. And of course, one of the signs where you actually start to see people panicking is when your phone alerts gets triggered. Yeah, when your phone alerts get triggered. I mean, how do you know your phone alerts get triggered? Let me just try to show you how do you know when your phone alerts will get triggered. Yeah. So this is the time where you will actually see how it looks like, or how it sounds like. Okay, if you guys have actually installed this Yahoo Finance, right? So if you have not installed Yahoo Finance on your phone, go ahead and install Yahoo Finance, and then from there, basically you can actually put in all your watch list and whatnot, and of course, when you start to hear this kind of a sound, when you start to actually hear so-called buzzing sound, that's the time when you know that the I think I recorded, maybe, yeah, it's just buzzing. I mean, I've recorded it on my phone, but I can't pull it out. So if you recorded it, if you have installed Yahoo Finance on your phone, you have put in all your stock checklist, watch list and all, and if the phone continue to buzz or give you the notification every 2 or 3 seconds, that's the time where the maximum panic in the market is actually happening. Yeah, because last week itself, what has happened is that there are actually a lot of stocks which actually gone to their 52 weeks low. Yeah, there's actually a lot of stocks gone to their 52 weeks low, and of course, this includes the big names, like what is that? Like Nike. What is that? Nike. I think Visa also went 52 weeks. What is that? Mastercard, AMD. What is Facebook? Meta. Yeah. SE. HP, Hewlett Packard, and a lot, all of them are actually now at the 52 weeks low, and of course, a lot of the stocks has also lost basically values from the time so-called pre-COVID, post-COVID till now. Basically, they have also a lot have actually gone back to pre-COVID time, or pre-COVID time stock prices. Yeah. So of course, for those who have actually held on to their investments or to their stocks, right? I hope that during this downtime, you had also took some opportunity to actually put on some great stocks for your investment portfolio. Yeah. So of course, we do not know when will the bottom be, whether it breaches back this below this 3006 level. But of course, This is all due to the current situation of the high increase in interest rate, and then the Fed policy to actually do or die kind of policy, right? To actually manage the inflation. Yeah. So market seems to be up. Yeah, that's good. So this is the thing which we need to watch. And of course, on the weekly chart, also you also see a significant level. I forgot to share. Let me share again to you guys. So on the weekly charts, also you also see a significant level, and of course that is actually on the 200 moving average. Yeah. So this is actually the weekly chart, and this 200 moving average is also a line for you to actually watch that we don't break down below this line, because for S&P 500, right? I mean, we rarely break below the 200. I mean, once we break below the 200, this was actually one during the COVID time where we actually broke below. But of course, we only broke below for a few days. For 1, 2, 3, 4, maybe 5 days, we broke below for 5 days, and we actually quickly recovered back up. Yeah. But of course, for this time round, it's actually a bit different, because this was actually a so-called pandemonium, panic selling kind of thing. Whereas the current situation where we're actually facing is actually going to linger around for the next 1 to 2 year. I mean, 1 to 2 year at least, to see the economy, how it actually is actually going to perform, right? Going forward, with all the things which is actually happening around. Yeah. Yeah. So I mean, it recovery, it won't, even if there is actually any recovery up, right? I would say that it is actually going to be very choppy. It's actually going to be very choppy. It's not going to be one straight up, like what had actually happened during COVID. Yeah. So of course, with this kind of volatility, the way we invest, the way we trade will also be different. Yeah. And of course, we have also changed the methods of where we trade, where we actually also take less risk. I mean, we have also covered this in many of our trader stock, right? To actually take less risk on trades, take shorter trades and whatnot. Yeah, because I mean, if you see that every 2 months, every 2 months it goes up and comes back to square, right? I mean, basically, it is actually going to be, how to say, it's actually going to be very painful that if you have actually went into the market this low here, and immediately from there you have actually gained 15 to 20% on whatever you have actually bought, and 2 months later you are basically losing back that 15 to 20%. Yeah. So that is actually quite painful. And of course, some of the ways where we can actually protect this kind of losses is that during the time when we are actually holding the shares, we can actually include in to our portfolio some option strategies that can actually protect your long-term portfolio. Yeah, long-term portfolio. And of course, one of it is actually by doing covered calls is actually one, or by actually doing some form of premium selling to actually ensure that during this time you are also making some premiums to actually offset some of the losses coming through from your long portfolio. Yeah. So protection is one, and then of course the I think about 2 weeks ago, we had also covered. We have also covered some strategies. I think it was also shown in our newsletter some of the strategies. I think it was maybe here. I think it was in one of our newsletter. We have also covered some strategies on neutral strategies. That was one, and of course we have also covered one which was actually on a back ratio. Yeah, which was actually on back ratio. How you can actually enter a very, how to say, a very I would say a cheap entry as in the price of the option which you actually pay is actually quite cheap. You can actually structure it at more or less so-called zero cost, or you get either a small debit or a small credit. And of course, the trade which we actually did here was actually a SPY back ratio. We actually entered it just last week itself only. I think on Monday last week. We entered on Monday last week, and this trade basically we only paid 13 cents for this trade. Yeah, we paid 13 cents for this trade, and we exited. I think it was on Thursday, if not mistaken. So about 4 days, about 4 days trade. We entered on 19 and we exited on 23rd. 19 was Monday, and then we exited on Friday. Yeah. So we paid 13 cents for it and we exited at $1. Yeah. So we basically made about $87 on just a single 13 cents trade. Yeah. So of course, why we actually choose this type of trade is because we will only profit if the SPY actually have a big move, and of course because of the so-called the interest rate hike which was expected a few days after our entry, and all this we basically put in one very low and cost trade with high potential of profits. Of course, the buying power is a separate matter, because the buying power to actually structure this trade is actually quite high. Yeah, it's actually quite high because of the structure which we do here. I will also go through maybe later how we actually structure this, so that you guys can also review such kind of trade structures. So the buying power is actually quite high. I will go through why the buying power is actually high, but of course the amount which we pay is technically very low, and I'm not so bothered about the buying power, which I will also explain later when I show you a trade example. Yeah. So we did this, and of course we exited it only in 5 days. Of course, if we exited later, then the gain would have been more, because the market has actually continued to drop further after that. Yeah. So coming back to here, yeah. So yeah, this was yeah. So the level which we are watching is also the 200 moving average on the weekly. Yeah. So this is another level which you guys have to take a watch. So on Nasdaq. Nasdaq is also similar. Yeah. We are currently back to the same level in June, and of course we have gone down for, I think, 1, 2, 3, 4, 5, 6, yeah, 6 weeks. 6 weeks here. And of course, the 200 moving average is another level for you to watch. Yeah, again, not very often we actually move down to 200. Even during the pandemic time, we have actually not dropped to 200. Yeah, but of course, this is a shorter period. This is actually a longer period of drop. Of course, if you look at the amount of drop during the pandemic time here, it was actually about 30%, right? And of course, right now, the drop which we have right now is also about 33%. Yeah, but more painful, because we have actually dropped down for already more than 9 months. Yeah, coming to 9 months, we have dropped 9 months here. And of course, this was actually only days. Yeah, days. So here, very painful for days here. Is like a long sickness. It's like you're having a long sickness for 9 months. You're sick for 9 months. So that is actually more painful. Whereas this, you are sick for a few days, maybe just like COVID, you're sick for 5 days, where you are not feeling well, you are not so comfortable, but after that, you are fine. Yeah. So painful, but levels to watch 200 moving average. Yeah. So the daily chart won't be any much difference, and of course this is actually at the level of about 11,100. Yeah, 11,100. 11,100. Yep. So not too far, not too far. One bad news or or bad statement coming out from the chair today will actually bring us there lah, bring us there. Hopefully he will try to actually moderate it a bit, because I mean, the things that they need to do is actually known. I mean, how he says it is another thing on how the market actually interprets the things that they can actually do. And of course, if you tone it down, then of course, hopefully the market can bring in some recoveries in the next weeks. Yeah, hopefully we don't break down below. Okay, so this is actually on the market. Yeah, so we will go through right now. Uh, the back ratio, which I thought, of course, right now, I do not advise you guys to actually enter a bear back ratio, because the market, I mean, because we needed actually a big move, from when you actually enter this, we need actually a big move. I mean, 5%, 6% kind of movement would actually bring you into profitability. Yeah, but of course, right now, I mean, chances are there is actually a support level, a support level at the 200 moving average. If we hit it, and there's chances we can actually bounce up. Yep. So there's some risk that the market can retrace back up, and of course, because of that, I would not enter the back ratio right now. Yeah, last week was actually a different story, because we had more negativity in terms of the market, and higher possibility that the prices can actually break down. Yeah, so unless you are actually putting it as a so-called hedging trade, okay, you can also use a back ratio as a hedging instrument, because of the low how to say a low I would not say low cost, low entry uh, and high profit, because the profit can run 5 times, 10 times, or even 20 times. Yeah, then you can actually use this as a hedge instrument for your portfolio, or even for your other trades. Yeah, but other than that, if you are actually doing it as a directional trade, probably not now, because of the support. Yeah, but of course, if you feel that the market will bounce up strongly, because we have actually came down about 15%, we have lost that 15% reversal, right? If you feel that the market can actually go up, then of course you can actually be bullish also, using this back ratio to actually do a back ratio to for the market to actually go up. Yeah, you can actually structure it on both sides, whether using a call or a call to back ratio to actually when you are bullish, and of course put back ratio when you are actually bearish. Okay, and let me go here. Okay, let me share my screen here. Yeah, if you have any question, by all means, put down on the chat so that I can actually answer them. Yeah, yeah. Okay. Okay, I hope you can actually see this. Let me make myself smaller. Okay, so this is actually the Tastyworks platform. Yeah, if I mean, basically, this is actually one very good platform. You can actually also use. I use multiple platforms, and this is actually one of the platform which I use. Okay, so this is actually on Spy. This is actually on Spy, and when we are actually doing back ratio, basically, I will do at the minimum of about 2 months, 60 days, 60 days, if not longer, Okay, do not do a back ratio short, how to say, a short expiry back ratio. We actually need to do longer term, and I will also explain why we need to actually pull the back ratio towards 60 days or more. Okay, so let's say if you are actually bearish, let's say you are actually bearish on SPY, and you feel that SPY will actually drop significantly from today. Yeah, so SPY is actually already currently moving down the futures. So you feel that it's actually going to go down. So what you basically do is on the strike price here, you actually look for anything 60 days or more, and I would take the monthly expiry because of the liquidity. Let's put it at 52 days. Yeah, this is actually closest to 60. Yeah, so if you do here, you open up the options chain, you'll see all the strike price. So it's actually very simple. And of course, in trading of options, right, basically it is only I would say how to do it's only like playing Lego. Okay, if you actually understand how to actually how to say, puzzle each of the Lego together, you can actually form a car, form a ship, form a house, and you can actually form a lot of things. The same in options. It is just putting on the calls, the buy call, the sell put, and the buy put. Yeah, and of course, each four of these would actually have a different kind of direction. If you are bullish, then basically you are talking about buying a call or selling a put. If you are bearish, then you are talking about buying a put or selling a call. Yeah. So you only need to understand these four so-called actually there's only two direction, and which of the options, buy or sell, give you that direction up or that direction down. So that is as simple as that. Okay, so once you actually understand the direction of all these options, right, then of course it is actually quite easy for you to actually make structures out of the strategies. Yeah, so for example, we when we do a back ratio, basically it involves a bearish back ratio. It involves selling a put. Okay, selling a put. Okay, selling a put is actually a bullish direction, correct? So we need to actually do a sell put first. And of course, because our direction is bearish, right, then of course we need to actually add this on the building blocks, right, something which is bearish. Yeah, and of course, how to actually do this, basically we need to buy puts. Yeah, buy puts. And when we actually do that, so the first thing which I'll do, I will make it very simple for you guys, is the first thing you do is you sell a put at the money which is now 364. Yeah, 364. So of course, if you do this, you actually collect $15. So what you do with this $15 is to actually use this $15 to buy two puts. Okay, so $15, you divide by two is 750, right? So 750, because you need to buy two. So you just run down this options chain here until you find something close to 750. Okay, so close to 750 is either 7342, because this is 781, you need to pay 781, and this you need to pay 733 to buy. Okay, so I will actually just choose let's say I choose this 340 strike, where I will actually need to pay 733 for one put. Yeah, so then I would actually need two, right? So what I do is I add the contract. So this is one, I add two. Yeah, so when I do this, basically I would actually need to pay credit. I will actually collect 48 cents for this. I will collect 48 cents for this trade. That means I don't even need to pay for this. I will collect $48 into my account. Yeah, and the probability of profit for this trade is 63%. And basically the what else here here yeah here yeah here so here the max loss is actually 2352. Okay, so this max loss is actually your buying power. That's why I said I try to segregate buying power and the amount which I collect or I pay for this trade. And I'm not so troubled by this buying power, because I need to actually how to say, I will only get the max loss if certain of the parameters are actually hit for this trade, and I will ensure that I do not hit those parameters. I will not let the trade hit those parameters where I will actually run into a max loss. Yeah. Okay. So the okay. So what the curve, right? The curve will actually show is this. Yeah. So currently we are at this level. Our price is around, is at this level about 364, right? 364 here. Yeah. So we are here. And basically this would be the risk profile of your trade. Okay, so if the S&P actually goes down, you actually make profit. Yeah, of course, if it goes down below 33315, then here is all the green. You actually make a lot of profit. Yeah, but we are not really playing this green line. That means basically till expiry green line. We are basically paying this theoretical line in orange here. Yeah, so this line actually moves together with time. Okay, when time passes, right, what happened to this orange line is that it will actually come down. Yeah, that's why I said you will hit max loss when S&P is at 340. You will hit max loss. Yeah, but of course, if there is actually a fast movement within say days when you actually enter the trade, what happens is that your P&L will still run on this orange line. Okay, as long as this orange line don't drop below the loss line here, that means drop down below zero, and the price continue to drop, you will actually make profit. Yeah, so for example, if you run through, here, you can actually see that the profit you're making here is $17. If it runs to 340, you will make $98. If it runs to 325, I can't see, but probably about $200 or $300. Yeah, remember you collected about $48, and of course, technically, if you collect $48, any profit which you make, technically there's no cost to you. And because we are not playing the expiry P&L, we never let time pass until this orange line drop below the loss line. Yeah. So for this kind of trade, yeah, we need fast movement, short period of time, quick pop, and then we actually exit the trade, and we reestablish and see whether there is actually going to be a huge movement again on SPY or any other stocks to trade this strategy. Yeah. So I hope you guys understand the risk profile here, because this is actually very important. And of course, if the trade does not move along the direction which we want for this, which is actually bearish, when the trade actually goes up, right, you would actually not really lose money. In fact, if you keep it till expiry, you will actually make that $48. But because the rule for this entry is never keep this trade till expiry, we would actually just exit either at a break even or a very small loss. Yeah, because if you see if it move up above, right, basically your P&L would be about 24, 17 or 11 or something. Very, very small loss if it moves the other direction, but very big profit if it moves into your direction with a big and huge movement. Yeah, so that's how this back ratio behaves. Of course, the other thing which you guys need to need to take care is the implied volatility. So of course, if the implied volatility changes, that will also affect this orange line here. It will actually move up or move down. Yeah. So this is how we structure out a bearish back ratio. Yeah. So if we move out to the bullish back ratio, is also similar. So bullish back ratio, very simple. Sell a call at the money, which is $16, and then move down to see how at which price you can actually buy a call, two calls with this $16, which is basically at $8 strike, $8 premium. Yeah, so $8 is at this level 382. So you just need to actually buy two, just add one, buy two. Then you actually pay 2 cents debit for this trade, 2 cents debit for this trade. And of course, the max profit, max loss is 1,007, which we won't let it go to that. And the position would be here. Position would be here. Yeah. Here. Yeah. So if you look, if the price pops up 365, if it moves by 20, say about 20 points, you will make about $460 here. Yeah. If it moves to about 381. So now it's 364, right? So if it moves about 380, that means basically about only $17 up. So if it moves $17 up, then you'll make about $400, which is actually quite good. I mean, that's why compared to the bearish and the bullish, the chances of a bounce is actually higher if you actually want to take low risk, high returns kind of trade. Then of course the for 2 cents, basically you have a possibility of the market to make $460. Yeah, $460 with this trade. Yeah, I think I structured it correctly. Yeah. Yeah, should be correct. Yeah, but of course, again, the thing, make sure you close the trade before this runs down. And normally the rule which I take is between 5 weeks. 5 weeks before expiry, I will actually close this trade, or even shorter. Or even longer. Yeah, that means I don't let it run less than a month. In fact, if after 1 week or 2 weeks, if I don't see any movements, then basically I'll try to exit this trade with a break even or a small profit. I will just exit this trade, because not likely that there's actually going to be a pop anymore. That is actually going to happen if it just moves out slowly. Yeah. Okay, yeah. So this is the back ratio strategy, which I wanted to share with you guys. And of course, the ones which we actually did earlier was, let me just show you guys again. The one which we actually did earlier was here. The one which we actually did earlier was here. Yeah, you can see here the back ratio. We did a back ratio on Twitter on 13th of September. So 30th of September, of course, that is just speculation that they had the EGM shareholders meeting to approve that, right? So we did one to try to see if there's any pop after the meeting, but of course there was no pop after the meeting, and for this we how to say this we actually and only for small, I think we paid 14 cents or something like that. And then we exited with a small profit of about only 11 $11, if not mistaken. Yeah, you here, yeah. Yeah. I think we did it at $11. Yeah, we did a 32% gain, which just makes up to about $11. Yeah. So this was the back ratio. You can also see the TikTok video which we had on that, and of course, as and when we do other trades, we will also try to actually post it. We did somewhere early September the Iron Condor on SPY, which we are still holding on the position right now. Yeah, right now, I think about 2 3 weeks, 2 over weeks in, yeah, 2 over weeks in, we're still holding on to the Iron Condor position. Yeah, so as and when we do the trades, we will try to actually post it on TikTok. So if you have not subscribed to our TikTok, just subscribe and follow so that when we post our next trade, you can actually also learn from it. Yeah, and we also share the results with you guys. Okay, all right. So great. If you have any questions, pop it there. If not, then we will continue to engage with you guys on all our channels. The newsletter coming out every Monday. Yeah, every Monday, straight to your inbox. If you are a subscriber, if you are not subscribed, I think the best way is to subscribe. Otherwise, you can also go to the newsletter website to actually read it. Yeah, yeah. So it's better to subscribe because once you subscribe, it gets sent to your email. You can archive it in your mailbox, and of course, all those how to say, all those trainings or write-ups which we actually do are all the so-called trade secrets, all the shortcuts, yeah. So I'm giving you guys all the shortcuts in our newsletter to how to structure and how to actually trade better and what to watch out when you are actually going into trades. Yeah. And this is the TikTok. Yeah. So yeah, I mean, don't forget to like and share our channel because that helps us promote our channel to actually bring in more people to trade. Because of course, one of the things which quite concern a lot of people right now is actually where are we going in the next months or year in terms of the economic stability and all. Yeah, of course, if there is actually risk in terms of securing jobs or businesses and all, then of course, if you know how to actually generate an alternative source of income through trading, then of course that is also quite a good way to actually make a living or make some money for your family and for yourself. Yeah, because once you actually learn the skills in trading, then these skills actually keep sticks to you, right? Whether the market actually goes up or whether the market actually goes down, we are all covered. Yeah, like just now we have actually shared with you. In case you are bullish about the market, you can actually do the callback ratio. If you are bearish about the market, you can actually do the putback ratio. So and if you are neutral, then we can also do the neutral strategies. So you are actually all covered, and we are not really bothered of where the market is actually going. If you know your stuff and you know what strategies to deploy during what time. Yeah. So yeah, so this week just watch carefully, not enter in too many trades, because the market is actually going to be a bit volatile. If someone how to say put his big mouth saying something bad, then of course the market will have a negative reaction, and that is actually going to be bad for the market, or if you are on the wrong direction. So until next week, I catch up with you guys again. Please trade safely and have a good trading week. Bye bye.